Hello and welcome to Financial Technology Frontiers. We are here in for a insightful conversation this time around in the world of mortgages. Mortgages have played a very important role in the growth of the Canadian economy, and especially with the real estate showing so much of promise. There is a dearth of real estate in this market. Of course, the mortgage prices are going up, but ultimately, mortgages have been quite an important aspect of this industry. And today I am here to talk to somebody very interesting who has had 17 plus years of experience in this industry, has been one of the most modern personalities in the area of mortgages, and her name is Laura Scarlett Martin, and she is the Chief Operating Officer of Matrix Mortgage Global. Laura, welcome to Financial Technology Frontiers.
Thank you for having me, Babu. It's a pleasure to be here.
Perfect. So, Laura, you have been seeing a lot of trends in the last 17 years of your career in the mortgages sector. There has been a whole lot of transformation that has taken place in the way it was done, and with technologies like ChatGPT, blockchains, and various other things coming into the picture, which are going to redefine the way the mortgage industry is going to look like. We are seeing NFTs and real estate tokens being issued. So, what kind of trends are you seeing in this sector, especially in the next 4 to 5 years to come? What are the kind of opportunities that you see in this sector?
Well, there's a few things to look at within the sector, especially within the Canadian mortgage sector, because our banking regulations mean that it's much more tightly controlled and that the government has a large degree of influence in terms of what the rules of the game are at any given time. So, as someone with a purview of 17 years, I've seen the lending guidelines and constraints go from fairly loose, where you could get a 0% down payment and you could write your income on a napkin and they'd say that's fine, to suddenly 2008 happened. Oh, it contracts. Now the rates have gone up and it's very hard to get approved, even with AAA credit and all the documents under the sun. So I've seen at least 3 or 4 cycles of that nature. And it's really tough for borrowers being strung along. What we have seen is that the house prices has doubled every 10 years in urban centers like the Greater Toronto area and even Vancouver. But have incomes doubled every 10 years? No, they have not. Sorry, spoiler alert. So we're seeing that it's harder and harder to qualify for mortgages. The mortgage sizes are getting bigger and bigger and bigger. And mortgage brokers, they only have so much control because ultimately the government and the banks decide who's approved and who isn't. And that means that you need to really have a large degree of dexterity and problem-solving ability. Maybe that looks like putting multiple people on title for a mortgage or leveraging equity in your existing property to buy more and other things like this. We're seeing things emerge like fractional home ownership, where several people are just taking shares of a house, and we have companies buying the house to provide the ability to at least participate in the housing market to different people. But I think the transformations will keep coming. Relatively speaking, the mortgage world is very low tech, and we have another sort of cycle of an aging population and demographic of the mortgage industry, where you see an average of over 50 years of age for the average broker or banker. And I think as they start to retire out and there's a newer, younger generation, we'll see more advances and more technological uptake.
Interesting. You rightly said about the low technology offtake in the mortgage sector. And especially when with the newer concept of real estate tokenization coming into place and the kind of engagements that is going to become more and more digital, there has to be definitely a lot of transformation happening. You really explain that you are sandwiched in between the regulator and the banker today when it comes to the mortgage agent. So, what are the kind of bottlenecks that the industry is facing today when it comes to the growth?
It's okay, it's two things. So it's a culture thing. So the banks in Canada, the big five, we'll say, although there's really at least 6 or 7 major Schedule 1 charter banks in Canada, they don't like to work together.
Mhm.
And for anyone to implement some sweeping idea or technology that would be available across platforms, like I think the best thing possible for the industry would be some kind of algorithm or AI technology that can help to determine borrower qualifications while also removing bias. So for something like that to work, everyone needs to share their data. And when you have fierce competitors, they're going to do everything possible to hold up that process and not share data. And each of these individual lenders, the big five, plus the over 200 lenders that are in Ontario and Canada that are B lenders that do, I guess, like more alternative mortgages. They have smaller funds, like under 150 or $200 million. They all have different ways of collecting data, different ways of integrating that data, of managing that data. And so to find one form and one data set that fits is nearly impossible. So you have that one layer with the actual lenders not really wanting to cooperate. And then you have that additional layer of the regulators saying, honestly, this is terrifying to me. I don't want any of this. And so even though we were supposed to have open banking in Canada by now, by 2024, they're still in phase 1 or 2 of that open banking plan because the government is so gun shy to pull the trigger. They want to do a lot of research. They want to make sure that the implementation is going to be smooth and acceptable to all the major stakeholders. And I'm sure there's some lobbyists with their fingers in it, slowing things down.
Superb. One of the most risk-averse approach that is basically causing a lot of trouble to the open banking and open financial services sector, which is actually taking the kind of time, and eventually it has to come. Otherwise, the country would go behind the rest of the world. So you cannot risk that for the sake of you lobbyists that are happening in the sector. So I'm sure there is a lot of action going to happen into the open banking space purely because of virtue of the value that it brings into the table.
Yeah.
Now, coming to the technologies, you spoke about a lot of interesting technologies. You have been a fan of AI technologies yourself. What are the kind of technology trends that you see would be sweeping into the sector, into the mortgages business today?
I think, there's a really good saying, which is that your job isn't going to get taken by AI. It's going to get taken by someone that's using AI. And I think that a lot of brokers, lenders, underwriters, they're worried about their job security because in the instance of, for instance, Morgan Stanley or JP Morgan, they created a commercial loan underwriting software that replaced 900,000 human hours of work in seconds. So that's chilling to hear as a mortgage underwriter. Like, what does that mean for my job? But of course, we're going to need people that have the experience that can go and train these AI models because they're not fully trained up for the outlier occurrences and to make sure that the compliance is being met and that customer service will be ever more important. So what I see happening is a lot of the calculations and determining eligibility and defining what those metrics and what the end result in terms of a term sheet is going to look like will absolutely be increasingly done by intelligent large language models and AI and data lakes. However, this is where we need to look at ourselves and say, okay, what can I do that the AI cannot do? And that's still that human interaction and customer service. And I think that it's going to be so important for everyone currently in the industry to really sharpen up on ways that they're able to deliver better products, better communication, streamline information, make document collection not so tedious and time consuming, and just make the customer journey that much more smooth. And that's how you can stay relevant. On the topic of fractional homeownership, tokenization of real estate, and blockchain, these things I think are a little bit further down the line, again, because of the regulatory component. We have people doing things like fractional homeownership without blockchain while they're waiting for these open banking approvals to go through, while they're waiting for the regulatory compliance to loosen up a bit. They're just doing it the old-fashioned way where they create a numbered company, they purchase a property, and then they fractionalize that in terms of shares, and they do their due diligence and have the lawyers draw that all of that up. And of course, there is AI on the background helping to move the paperwork along and whatnot. So I think it's really just going to replace and make faster things that are rote, that are redundant, and that can and should be automated.
Superb. So one is, of course, implementation of these technologies. Okay. On the other hand, there is a threat. The threat is, for example, AI faces a lot of threat due to hallucination. Okay. This is one of the threat. The other thing is the frauds. Like how AI is a powerful tool in your hand, the AI also has a powerful tool in the hands of the fraudsters.
Certainly.
The risk management, while there is a lot of judgment that can be easily automated with the help of AI and cognitive AI, still there are a lot of human elements which cannot still be judged, and the language is just learning. How are organizations looking at creating that equilibrium or balance from technology versus human, and how that human element also comes into picture? Any thoughts on that?
Well, when it comes to cybersecurity fraud or even mortgage fraud, 95% of the time, social engineering is really at the heart of the scam. So it's really about training people on how to detect fraud scams, like knowing that, for instance, the Canada Revenue Agency will never send you a text message, right? For any reason. That's not how they communicate. So the CRA says, hey, come claim your tax refund here. That's not the case. Same with Canada Post or FedEx, right? Like I think text message fraud is the worst one. Also, be careful about what you show on your personal profiles. Like oftentimes, for instance, if you look at the MGM casino that was defrauded for over $500 million, that happened because the fraudsters went on LinkedIn, figured out who worked there, and then called the telehelp and asked for a password reset. And then they had the keys to the castle, right? It wasn't just straight hacking. It was social engineering. So we need to keep our guards up about those types of things and have, just double entries to verification, ever more extensive types of verification on those types of things, as well as mortgage fraud is completely rampant, especially identity theft. I think that's probably going to get worse too. So make sure you have insurance for these things. Cybersecurity insurance is not very expensive. It's less than $100 a month. So it could mean like very, very major savings for you. I have a client that lost $40,000 out of their business bank account from a cybersecurity fraud scam, and they were not able to get that recompensated.
Is cybersecurity or cyber insurance quite popular in the mortgages circle?
Not really. There is errors and omissions insurance, which brokerages are required to have. But then in terms of, exposure of client documentation, like that's a major risk for financial institutions in particular. Like if the Toronto Public Library's data is going to get hacked, you can bet that TD, RBC, BMO, or Scotia client data could absolutely get hacked.
So what kind of engagements are happening between the fintech and the mortgage sector? Any new innovations that are coming into place, or what kind of partnerships are taking place in this?
Well, I love what I'm seeing is a lot of niche mortgage types of fintechs. So there's various aspects of a mortgage, right? There's how do you get mortgage clients and that whole pre-sale marketing questionnaire, adding value in terms of education. There's the Canadian mortgage app, for instance, which is a fintech app, and they provide they have over 1 million downloads in Canada. You can go and see what you would pay in a mortgage and if you can get approved. But then that company sells those leads to mortgage agents, right? So a lot of fintechs have a free sort of version where they offer some kind of value or education for clients. And the way that they get paid is on the back end by providing realtors or mortgage brokers with those leads of people that are clearly interested in making the move and getting a refinance or purchasing a home. Another thing is on the journey, people have to do a mortgage application. And typically that's, you do it on paper, you fill out a PDF form. And there's been various companies that have innovated the way that's been done by putting it into smarter chunks and making a more interactive web form and increasing the conversions of people that are doing those. Another various aspect of this could be in smarter document collection, using AI tools to do your document emails and the typical types of stages where you would communicate with a client. You can use email automations as well as things like Perplexity or ChatGPT to generate that content for you. I think that's probably like a very basic but important step, because so much of what brokers and underwriters do is still communication. And then finally, we have that piece where you get down to the calculation of it, the borrower eligibility, analyzing the credit bureau, analyzing their bank statements. Like obviously AI would be far more adept at analyzing a volume of bank statements and a profit and loss statements than a human would. So I think that's where the biggest uplift and the biggest potential time saving is for the future of mortgages and fintech.
Super. Of course, the mortgage rates are high, but at the same time, the influx of immigrant population as well as growing need for houses and mortgages in Canada is definitely a very, very encouraging factor. So, what are the most important growth triggers for this mortgage sector in the years to come?
One thing that is good about the Canadian mortgage market, which is over $1 trillion market, of course, and there's over 7 million outstanding mortgage loans, is that unlike the United States, where the mortgage term is 30 years, you get a mortgage once at a specific rate, and you could potentially just not touch it for the entire duration of that mortgage, and you stay with that lender. But in Canada, the terms are between 1 and 5 years. So every 1 to 5 years, and in fact, on average, every 2.5 to 3 years, you need to refinance that mortgage. So once you have someone that's a home buyer, they're stuck in this mortgage cycle and they're coming back to a lender or a broker every 2.5 years for 25 to 30 years. That's about 10 transaction average per customer. So that's actually a huge growth opportunity for people looking to get involved as mortgage brokers. And of course, the more people that live in Canada is the more people that will become homeowners, is the more people that will be mortgage holders. So the immigration rates are looking something like 250,000 new Canadians a year, plus another 250,000 visas or international students. They have said that they're going to pare that down a little bit by about 20%. But that's still a significant amount of new entrants. I am a little concerned about if they're going to qualify or not, because it's so hard. You need, for a property worth $2 million, you need at least 20% down payment. Who has that kind of cash on hand? The biggest trigger is going to be an influx of actually affordable housing that people can buy, or a very significant change in the regulations where maybe they reintroduce something like a 40 or 50-year amortization policy so that people have longer to pay their loans back and they don't have crushing monthly payment sizes.
Interesting. As a successful mortgage broker for last 17 plus years, what is your advice to future mortgage brokers or the industry to ensure the highest amount of growth in their careers?
Having very strong referral partner networks, it's very much a people business. Without any clients, you don't have a business. Sorry, you have one job. You either need to control the money or you need to control the flow of clients. So if I'm a lender, well, I control the money. I wait for you to come to me. But as a broker, you need a client to bring to a lender or else you don't get paid. So every single broker needs to absolutely hone their skills in marketing, marketing. Sales and marketing. This is a sales and marketing job. Honestly, the particularities of being a good broker do matter. And that's kind of a different subtype. That's someone that's more analytical in nature, that enjoys the matrices, that enjoys the process of document collection and going line by line. So I would say first identify which one of those two things are you? Are you a salesperson first and foremost, or are you more of an analytical implementer type? And if you are more of an analytical implementer type, I suggest you pair yourself with someone that is an excellent salesperson so that they can keep you busy and you can make a great team.
Super. Thank you very much, Laura, for that wonderful capsule of information that you have shared with us.
Thank you.